You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and I'm so happy you could join us again bright and early this morning to talk about none other than Toronto real estate. And I'll tell you one thing, the cat is out of the bag. I'm a little disappointed because I was hoping we could kind of ride this train a little bit where we have our little secret that the real estate market might be doing better than everyone is talking about. But unfortunately, everybody knows we're in a pretty good position right now as far as the real estate market in Toronto. And now the news is becoming more and more optimistic. And I want to share with you probably the biggest article of the day that everybody is reading, guys. You can't hide from this anymore. And the article is actually called TD Now Forecasting Toronto Home Prices to Increase by 7.8% in 2020. That's one way to get everybody's attention. Now, we've been hinting at the possibility of things bouncing back quicker than everyone's talking about in the last few days on our podcasts. But today is the day we really got to dive into this because now this is not hidden news anymore. This is out in the open. Some of the stuff I want to talk about today, I want to talk about this price surge and whether we can expect to see huge price growth in 2020. I want to touch on cottage countries and how they're holding up in 2020. What have they been experiencing in the last little bit? And I want to finish off by saying what will happen to the economy as well as the emergency benefit that we're seeing out there. Is that going to continue how it is today, or are there maybe plans for it to change? Thanks again, guys, for tuning in to Toronto's #1 real estate podcast. I'm so thankful to have you and to just be able to learn the news as it's coming out on a daily basis. Things change very quickly, and having an audience like you guys with all the love and support and the comments online, I appreciate it all. And we're going to continue to put out wonderful content. Make sure you hit that subscribe and follow us if you're not already. So let's get into this article. I like to put the big stuff first. The article, once again, TD Now Forecasting Toronto Home Prices to Increase by 7.8% in 2020. I'm going to read the article for you. New data from TD Bank suggests home prices in Toronto may increase by nearly 8% in the remainder of 2020 in light of the current state of both the economy and the real estate market. As said by TD Bank economist Rishi Sodhi, Canada had its first real taste of the impacts of the novel coronavirus in March, despite the strong first half of the month. Leading up to a new stay-at-home measures, the Canadian market took a dramatic hit and home sales plunged 14% month over month, while new listings were down 13% during the same time. The drivers of the housing demand decline are numerous, with social distancing serving as the prime culprit, while historic job losses, collapsing economy, and stalled population growth added additional pressures. So we saw all this drain. I mean, there's no mystery of this, guys. You gotta be living under a rock to see all the pressures on real estate today. In light of the pandemic, TD economists expect home prices in Canada will remain below their pre-COVID-19 levels for the rest of 2020, with the numbers of transactions expected to plunge in April before gradually recovering in the month to come as the country reopens and social distancing measures ease. So here's the trick with this whole article. The way I read that is saying they're expecting an 8% growth, but it doesn't mean that we're going to reach the levels pre-COVID-19. Well, then you could say, well, then is that really a growth? Because technically we're down. Well, this is year-over-year growth, but we're forgetting the mass growth that we saw in the beginning of 2020. So really, when we're talking growth, we have to remember we're talking year over year, not month over month. Of course, we're not going to see what we saw in March until probably later in the year. But when you start telling everybody home prices are going to go up by 8%, everyone starts turning their heads, and this is what I think is going to happen. Home price growth is projected to hit a national average of 6.1% in 2020. That's across Canada, compared to 2.3% increase last year. Here in Ontario, home prices are forecast to increase by 8.3% in 2020, while Toronto could see an increase of 7.8 compared to 4.1 in 2019. So even with everything that we've come through, they're anticipating it could. It's not going to happen. In fact, they put a big disclaimer at the end that it's possible this could be just completely wrong because of all the uncertainty. But in 2019, we saw a 4% growth. And even despite everything we saw this year, they're expecting almost double that in 2020. Guys, we are in such a tight real estate market in Toronto. Please don't be oblivious to that. Please don't ignore the numbers. The numbers tell us how tight a market it is. Everyone's like, oh, well, the economy is going to fall. I hear all the negativity. I get it. I hear it. but you don't understand how tight the market is here in Toronto. In the early part of 2020, things were absolutely bonkers. They were just, it was like opening a bull out of its cage, and this thing was going crazy. Like, this wasn't just a dampening of a market that's just tooting along. This thing was like just ravaging, and now all of a sudden it's just kind of been put on hold, right? So although, yes, we're going to see a bit of a cool down, we've seen prices come down that same 8 to 10% with all the multiple offers coming off the market. We have a ton of momentum in our marketplace that's just aching to get out, right? Like, and we already saw a dampening in 2017. It's not like we're coming out of this 10-year bull run like everybody else. Toronto has already been hit, and we've recovered from that. And now we're in a position where they're just like, let us go, let us go, let us go. Plus, we're a safe haven, and as it's seen across the world, which is getting more and more. Plus interest rates, there's just a ton of factors. It is important to note that previous reporting had forecasted Canada home prices to, quote, lose their momentum, while other reports have suggested home prices in Canada could drop as much as 5% in 2020. Here's the irony. This was the conversation like 2 weeks ago. I put together a second quarter update video that's going to be coming out next week. And these were some of the numbers we were looking at when that update video came out. And it's actually really funny to hear my optimism at that time, given the negativity and what the options were and how I was leaning towards how things would rebound quickly. But all of a sudden, from going, it could be down as much as 5%, which was not long ago, to now talking about up possibly 8%. What changed? Well, here, guys, if you've been following us the last few days, you're going to know what changed. This is not brand new information. To somebody that's just reading this article, it'd be like, what the hell? Like, how in the world did that happen? It doesn't make any sense. But if you've been tracking along with us, we're seeing the number of sales going up very quickly. What's more, Toronto home prices already dropped 4% in the first half of April. Yes, it did. It dropped a lot. And then as for 2021, the bank expects the market will see stronger activity as housing market benefits from the pent-up demand and low interest rates, which could result in Canada's sales to climb by 50%. Now, I got a little fun chart here that was showing what it was climbing in February. If you think it's going to climb in sales by 50% year over year, guys, not like in the past, not just the recent past. We're talking a year ago. Here's the thing. In February, we had an 82% year over year growth in sales. In February, guys, when I'm talking about the market was going crazy, it was going crazy. Okay. So when we're seeing, oh, it could go up as much as 50% from last year. Yeah, that makes sense. I actually doesn't surprise me. In fact, in the last little while, if you checked out our last video we did 2 days ago called Rock Bottom Real Estate Prices, we were talking about, that was one of, I still think it was one of the most underrated podcasts that we did because it was the most recent information. They talked about how sales were down 70%, but all of a sudden in a week, they were only down 57%. That's a 13% jump in 1 week in the number of sales. This is the past week we're coming out of, guys. What do you think is going to come this week? What do you think is going to happen when everyone starts hearing what's happened at the end of April as opposed to the first half of April? This is going to go nuts, and the number of sales are going to go up, and activity is going to go up. And if anything, I'm bummed out because I was hoping this would kind of drag a little bit longer so that my clients could get in the door faster. But I've been putting in lowball offers like I've been encouraging a lot of people to potentially do. I guess I can't advise, but I can encourage. I don't know where the line is on that. But I've been mentioning to people, don't sell, wait out the market. In fact, I was having a conversation with a gentleman just yesterday when I said, listen, dude, just pause for, he's trying to sell his property, by the way, he's purchased something. I said, just give it a month and I will bet you that the information coming out of the news is going to be optimistic more than negative. All the negative you've been hearing the last month, it's going to become more optimistic. And sure enough, within 24 hours, we're getting people being told market could go up 8%. Like what happened to the news of yesterday? How did everything just jump? So expect this to have serious implications. Now, again, all of this is a disclaimer. If things stay locked down, we're seeing momentum because we're seeing a province that wants to open. We're seeing measures in place that seem to be in a positive position for our economy. Now, yes, GDP is down. Yes, jobs are down. Yes, I get it. But the amount of spending coming out of our government has propped everything up. And at the end of the day, this is Toronto. We're not just dealing with local investors either, guys. We're dealing with international investors who don't want to invest in their own countries at this point because they've just been ravaged by coronavirus. And so it says here in the end of the article, just to give them a level of protection, keep in mind that TD said its forecasts are subject to an extremely high degree of uncertainty. Of course, this is why you can't put a seal on anything here, but I am seeing the trend. We've been seeing the trend for the last few days with no outside encouragement, by the way. When I say these things, I get people just kind of doing, you know, the thing that the dogs do when you're like, hey, you want a cookie? And all of a sudden they I apologize if any of you are watching with your dogs and all of a sudden I've just got their attention. But they turn their head and they kind of look at you like, huh? That's what my clients are doing when I'm telling them the news is going to become positive, because they're like, what are you talking about, Brad? Like, there's no way. Well, cat's out of the bag. Here it is. Whether I predicted it or not is irrelevant. This is now commonplace, and this is going to become, I think, more and more of a conversation, at least if the current trends in increasing in sales is what we see happen. Hey, wait until the day that you see the number of sales surpass the number of active or new listings and the days on market start going back down. How crazy is this going to get? How crazy? Anyways, I'm gonna digress here. And so anyways, the lowballing stuff that we've been talking about has been curbed, and I will say once again, you heard it here first. Okay, moving on. Toronto's home buyers looking to buy in cottage country during COVID-19. This article is interesting to me in particular. I sent it to clients of mine who were hoping to purchase something, but they needed to sell in Toronto, and so it was causing a bit of a problem. And so their thinking was, oh, hey, what if we buy a cottage as a secondary residence? Maybe we'll get a bit of a price deal, and that at least we're kind of half in the market, right? Like I couldn't buy a downtown low-rise unit in Toronto when the prices were down to $300,000, but maybe I'm gonna get 50, 60 to 100,000 off if I could in a cottage, and take advantage of this whole deal. Anyways, this is why I caught this article, and I want to share with you what's going on in cottage country, because you might not realize what is going on. Now, this article is specific to the luxury segment, and it seems to talk about Collingwood and Muskoka. In fact, the broker of record that's talking here, the agent is actually, I don't know if he's an agent. He's a broker of record anyways with one of their brokerages, and he is talking. And so what he says here is, quote, "Space is the new luxury." And the article talks about, it turns out that no matter how nice a home or condo you have in the city, during a pandemic, you're still in the city. And the restrictions COVID-19 has placed on Toronto residents have led many home buyers to start looking north to cottage country. Okay, well, wait a minute here. Quote from this individual, the broker, "In the third week of March, we were still seeing the same number of inquiries. We've been seeing an uptick in the number of physical showings since Easter." Hanny, that's his name, says over the phone. He says much of the interest he's seeing is coming from Toronto homebuyers who's looking to permanently move out of the city to find a rural recreational home. My mom's actually a broker as well, north of Barrie, and her and I have had quite a good little teamwork going on where we have people selling in the GTA that are moving out into cottage country. So I'm very familiar with this transition, but it's interesting to see that it's happening even for young people. But in this case, and the way that this article talks about it, is actually happening in the luxury segment. People are trying. These are it must be the way who he deals with, his primary clientele, but his clientele he defines here at the very end. I'll scroll all the way to the bottom. These cottages are in 5 million plus range and can easily rent for 100,000 a month. Our Muskoka lines are ringing off the hook right now. Mostly, it's important to note, it's very wealthy clientele who are reaching out. So the reason for that, of course, is these are people that have money, right? Most properties are showing are 2 to 3 million range, and they're almost all on larger acreages. This is the other thing they're talking about. People have been driving by, seeing signs on the side of the road and saying, hey, and they're calling up the agent saying, I'm interested. They're very wealthy and they've got money and they're financially stable to capitalize on what would be perceived as a hurting real estate market. And so what I find interesting out of this, of course, this doesn't come with any information outside of the luxury segment, but I do find it interesting that this is a trend. And I would anticipate that this is probably the case across the board, but more so in general, just to educate you guys a little bit on real estate here. The closer you are to the city, the faster you see equity growth, generally, right? Of course, there's exceptions, but generally. At the same time, it's also more susceptible to price fluctuations. So all these 8 to 10% price fluctuations that you've seen, that's not the case in rural country. Those homes, they increase slower, but they decrease slower. It's kind of why Canada seems to be trailing, and the news is always a little bit different than it is in Toronto and Vancouver. It's just it's a little bit more small town, right? They don't grow at the same pace, but they're also a little bit more solid. So if you're just wanting to, grab it and rent it and you care about equity growth as much, you're just looking to collect that general income, it's actually a pretty stable marketplace. And that's kind of the case here. So this is why I've been telling my clients who are interested in cottages, it's just you're not going to get the same price fluctuation and therefore as good a buying opportunity when things are going off the rails. but you can still find a bit of a deal, of course. And it's interesting to see that in the last week, they're talking about here, the number of showings have gone up because we have seen that happening here as well, which is almost a mirror image of the number of sales. People are not looking at homes to buy them online, in my opinion. They might be in some cases, people want to see it. But the thing is, the sales are going up because showings are happening. And if you don't know that, now you do. If you don't know, now you know. Okay, moving on. I want to talk about the economy and I want to talk about the emergency benefit before we kind of close up here, just to get some picture of what's going on, because I think this is going to count for our investors out there that generally follow the economy. The reason that we want to talk about this is what's going to stimulate whether we reach 8% or 4%, right? So when we come out the other end, the strength of our economy is going to dictate how fast things rebound. Of course, we've seen in the stock market and the amount of spending and all this growth that's going on. But what I want to talk about here first is I want to talk about the Fed, the United States Federal Reserve, because the Fed often will act as a starting point for the Bank of Canada when they're making their interest rate announcements. And it's important because just yesterday, the Fed pledges, this is written yesterday because there was announcements made yesterday. Fed pledges to keep rates near zero until full employment, inflation comes back. That's from CNBC. And the article reads, the Federal Reserve painted a dour picture. A dour picture? Why can't these guys just write grade 8 English? Like dour. I don't know what that is. I'm sure as you guys are listening, I'm just honestly, hopefully you're getting a sense that I'm just jumping into these articles. I'm not pre-scripting them. Anyways, so they've pledged Wednesday to continue its historic aggressive policy stance until it is comfortable with the U.S. economy is back on its feet. So what they're promising in the States, they didn't change interest rates yesterday. That was, I think, what was the anticipated announcement was what were they going to do with interest rates. But what they've talked about is they're going to keep them the same. So it's kind of like a future predictiveness. They're like, this is what we're going to do. Following this week's Federal Open Market Committee meeting, the central bank said it would maintain its current interest rate target between 0 and 0.25%. So they're going to keep that sucker nice and low for a while until everything shows clear signs, till the skies are clear. The committee expects, as a quote, to maintain the target range until it is confident the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. We're going to not be in any hurry to withdraw any measures or to lift off. We're going to wait until we're quite confident the economy is well on the road to recovery. That's the Fed chairman, Jerome Powell. And there was also no mention of the pace of bond purchases in the future, with Powell only saying that will continue as needed. This is what's nuts, guys, about this recovery in the States and why I think the market is rebounding so quickly. It has been made clear by the Fed. It's been made clear by the president. They will spend everything. Like the lid is off. We will spend whatever it takes to fix our economy. Like, what kind of monetary policy is that? But it's given an outrageous amount of confidence, and it's been meant a big rebound. The Fed is engaged in an open-ended program of purchasing treasuries and mortgage-backed securities. There you go. That's what they're talking about there. Okay, so let's bring this sucker home, right? Let's talk about the emergency relief benefit, that $2,000 that 40% of Canadians is enjoying sitting on their couch watching Netflix. This article comes from the Financial Post. It says, to reopen the economy, put curbs on the CERB. Now, here's the thing. This is an opinion piece. This is not news. This is just someone talking about what will happen on the other end of COVID-19 to the emergency benefit. And so I think it brings up some interesting points. So I'm going to start off reading here. The CERB was an early and critical element in the federal government's response to COVID-19. The government first announced CERB in late March, promising $2,000 a month. So we all know the details. And then they actually increased it to make it available to people with $1,000 per month and to workers whose EI had run out. It was widely praised for providing immediate income support and helping contain the coronavirus by reducing pressure on lower income people to work. The CERB made sense in an emergency. With attention increasingly turning to reopening the economy, however, the CERB is becoming a problem. Very interesting point. If just before I kind of move on from there, I'm going to mention the video we did a couple days ago called Yet Another Real Estate Bailout in Canada. In there, we answered the question, can an employee refuse to work in order to collect the CERB, which is kind of hinting at what this article is talking about. So go back and check that out if you want to learn how that works. But these are interesting stats. Between April 6th and 23rd, the government received 7.12 million unique CERB applications and paid $22.4 billion in benefits. Applications were twice the number of Canadians who experienced COVID-related job losses or reduced hours. What? I'll repeat that. Applications were twice the number of Canadians who experienced COVID-related job losses or reduced hours during the week of March 15th to 21st. So people are scamming hard. And if you guys know, that system is so easy to apply online. You just get the money. We'll deal with it later. Everybody, you get money, everybody gets money. So 40% of the number of Canadians employed in February. So here we go, 40% of the number of employed. So there's 40% people that were employed applied. Unlike the employment insurance program, which requires recipients. So what they go on to talk about here further down is where there's some kind of issues in here. Unlike employment insurance, which requires a recipient to keep writing a written record of prospective employers contacted, CERB recipients are not required to actively seek work or even be ready and willing to. There's no requirements for you to receive this benefit in that way. Already there are stories about people in the CERB refusing to return to work or accept new employment opportunities when they have arisen. Go back and listen to that podcast if you want to learn how that kind of works. That was a lawyer's article we read on that one. Employers are learning in other cases that employees may prefer receiving the CERB to working even when offered pay raises higher than CERB. Because here's the thing. You know what? Come to work. I'm going to give you $2,500 a month. Or stay at home and collect $2,000 a month. What sounds like a better deal? I think I'm going to spend time with my daughter. Screw you guys. Or they are hearing from employees that they don't want to earn more than $1,000 per month and would disqualify them from the CERB. So then there's the flip side. Okay, well here, I'll come back to work, but instead of paying, but then there becomes a problem there on the other end where they end up collecting more money. Anyways, go back and check that podcast out if you want to learn how that kind of will work. But it's very interesting scenarios and dilemmas people are finding themselves in because they don't want to lose that free money. The rollout of the CEWS program that was for businesses to support employees now provides opportunity for business to keep employees. However, the CERB remains more advantageous financially than the CEWS, obviously, of course, because that's money directly to Canadians. As health-related indicators improve, provinces are beginning to lift their restrictions. BC, which never shut down as completely as other regions, is reopening. Saskatchewan, New Brunswick, and Ontario have announced restart plans. Quebec will be reopening daycares and primary schools in a few weeks. Okay, another compelling reason to wind down this benefit is the federal government's own finances. The program costs more than $3.5 billion a week, which by any standard is a lot of money. The federal deficit for this year is already expected to exceed $200 billion. And the way they wrap it up here, CERB helped cushion COVID-19's impact, but it now threatens to impede the recovery. Part of the federal government's plan to reopen the economy should be to wind the CERB down. For any of you guys that are like, this is great, universal income, we should all collect this in perpetuity. Guys, this is not a functional long-term system. I'm sorry. I'm going to come out and be blunt there. We can't just be doing this. Nobody's generating the income to pay the government to pay for you to sit at home and pick your nose and watch Netflix, okay? So we need people back to work, and so we need to start to wind this program down, especially if it's creating some kind of disincentive for people to go back to work. And I think this is a well-written article talking about that. So I would say my thinking is I think people know that. I think the government knows that as well, the way that they didn't just open it up to everybody, but only to people who should have been severely impacted. And so I think you're going to start to see this wind down, and that will be an additional indicator that the markets have started turning and we are coming out the other end. Once this emergency benefit is cleared, it seems to me like things are pretty open and it's time to get back to work, and our economy should go from there. I'm going to leave it there, and I'm going to talk to you guys again tomorrow morning bright and early on our podcast. Thanks for tuning in to Google's #1 podcast for Toronto real estate. I'll see you next time. Take care and keep it real.